Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Another day, another dollar. May 5th, Cinco de Mayo. All eyes are on the job market as the Fed's rate cut window is narrowing. Stocks are rising as oil retreats. Earnings are coming in robust. Coinbase is going to cut about 14% of its workforce in an AI overhaul. The long bond is back in Wall Street's danger zone. AMD is going to report earnings tonight as Wall Street eyes data center sales. The JOLTS report, the jobs openings remain flat in March as layoffs ticked up. The Met Gala had a lot of, if you will, protests against billionaires for a ticket that costs $100,000 and features many billionaires. It is opulent. 47% of Americans say they hate, despise billionaires. It's an odd world we live in. When will gas prices go down? At least 3 months out is the expectation from when the war officially ends. Micron and SanDisk stock is surging on booming memory chip demand. More on that in a few minutes. Taking a look at some individual names. Microsoft is down. I should note that it's a big up day on Wall Street, as is Meta. But Google's up 5. Wow, 384. Apple's back up 3 to 280. SanDisk up 117 to 1374. Amazon up 3 to 275. It looks imminent that Alphabet is going to take the market cap leader crown from NVIDIA. NVIDIA still has legs, but are the easiest gains behind it? I think so. What you might see in the near future is a change in accounting where they start increasing dividends and buybacks. The biggest, fattest profit margins are probably a quarter or two left, and then they'll be behind NVIDIA. Let's talk about what we're seeing. The S&P 500 is up 0.75%, sitting at 7256. The Dow Jones Industrial Average up 0.5%, sitting at 49,207. The Nasdaq up 1%, all-time high, 25,308. The Russell 2000 all-time high, up 44, sitting at 2840. Gold's up 1.2% to 45.89 an ounce. Bitcoin's up 2,154. Sitting at 80,937. 80,937. Oil's down about 4% today. The White House gave Iran prior notification about the Strait of Hormuz operation, warned Iran not to interfere. There's a lot of tension still coming out of Iran and Strait of Hormuz. We are starting to get to a point where it's really adding up, the amount of days we're sitting above normal prices on oil. Market prices, if you will, have turned into anxiety prices. Anthropic is releasing AI agents for financial service companies. Today, you're seeing stocks like JP Morgan, Bank of America, Wells Fargo, USB, PNC, Goldman Sachs, the financial ETF XLF, Allstate and Progressive, all respond. So Anthropic, with an AI agents for financial services and insurance, part of the broader enterprise AI stack. The key concern is whether or not these AI agents could replace large parts of the software and services value chain, including high-margin financial and insurance workflows, potentially undermining long-term revenue from recurring licenses and large teams. The release could pressure companies that rely on repetitive white-collar or software-driven processes in financial services and insurance. We do not live in boring times. Intel's a big leader today, up 13%, rallying to a new fresh record high. Bloomberg reported that Apple may source chips from the company for some of its products. Micron's a big winner in tech, up 11%. The company announced a new product launch, rallying to a fresh record high. SanDisk rallying to a fresh record high. Western Digital, fresh record high. Some losers in technology. They're not quite the sexy names, but GoDaddy is down 4%, slipping below its 50-day moving average. USB, i.e. US Bancorp, assumes coverage with a neutral rating and a $100 target. It's currently about an $85 stock. Palantir's a loser today. They're down 6%. Companies beat expectations in the first quarter, issued above consensus revenue guidance, and raised its revenue guidance for 2026. That's a software company that's winning with AI. There will be winners and losers in software for sure. Shopify delivered another strong quarter with accelerating GMV. Their merchandising is doing quite well. Consistent free cash flow generation highlighting both scale and operating discipline. Growth remains broad-based across geographies, merchant cohorts, and channels, while raising payment penetrations continue to enhance monetization. The big sell-off today likely reflects elevated expectations and a modest step down in growth implied for second quarter guidance. The high 20% range versus 30% plus currently. Alongside ongoing investment in AI and infrastructure, these investments may weigh on near-term margin expansion, but they're aimed at reinforcing Shopify's long-term competitive moat. I don't directly own any Shopify, but I do pay attention. I don't want to say there has to be a number 2 to Amazon or number 3 to Amazon and Walmart, but it seems like Shopify is in the right space. Pinterest quarter reinforced a business that is successfully pairing steady user growth with improving monetization, particularly AI investments, enhancing both engagement and ad performance, the continued expansion in monthly active users alongside rising search activity and commercial intent. Highlights the platform's differentiated position in visual discovery and shopping, encouragingly the ad platform improvements and broader adoption of Performance Plus are driving better outcomes for advertisers, while diversification beyond large retail customers is beginning to gain traction. Initiatives like TV Scientific positions Pinterest to capture incremental ad budgets, particularly in CTV. Expanding its total addressable market, strong second quarter guidance combined with continued share repurchases and solid profitability helps explain the sharp positive stock reaction today. Pinterest could be a $30 stock pretty quickly. It wouldn't take much. They're monetizing wisely. I'm going through all the breaking news to see if there's anything that I want to hit before I hit the reviews of where we are and sectors that are doing well. The stock market lost ground on Monday, but we're seeing a market today that's trying to get it back. Oil prices climbed on rising anxiety about a renewed escalation of military action between the U.S. and Iran. Today, it's almost as if she loves me not. Pulling the petals off a flower. There's a Pavlovian instinct to buy weakness. There's gains amongst the mega cap tech stocks. Sliding oil prices today, a preponderance of better than expected earnings from Palantir, Pinterest, Pfizer, DuPont, Duke Energy, keeping participants focused on the impressive earnings growth of the first quarter of 2026. The U.S. has yet to fully capture the pickup in crude oil prices exports from the U.S. that has been driven by the Strait of Hormuz blockade. The trade deficit, which widened to $60.3 billion, as expected from a downwardly revised $57.8 billion. The widening was a result of the exports increasing $6.2 billion. So the U.S. is exporting oil. If this war doesn't have crazy political thriller novel undertones written into it, I don't know what does. So solid by the dip action, resulting in broad gains and strong tech leadership. Lower oil prices are adding to the constructive backdrop. Buenos dias and happy Cinco de Mayo. The holiday commemorates the defeat of French forces by the Mexican army at the Battle of Puebla in 1862, but its popularity jumped in the 1980s when beer companies began to leverage Cinco de Mayo in marketing campaigns. Mexico sits on top of the beer world leader, producing 30% of the world's beer imports and shipping more than double the volume of beer as any other country. Gold's up 4.9% for the year. I guess we can call that 5%. Bitcoin's down 9.8%. Russell 2000 is the big winner, up 11.4%. Followed by the Nasdaq up 7.8%. The S&P 500 up 5%. And the Dow Jones Industrial Average up 1.1%. In California now, law enforcement, the pigs, if you will, no offense, They are now allowed to ticket Waymos and robo-taxis. Hershey says GLP-1s are driving higher gum and mint sales. In large part, more Americans are taking the GLP-1s, finding out that they cause some dehydration in the mouth, dry mouth sometimes in some people. It's not listed as common, but Hershey says we're selling more gum and mints. DuPont reported a top and bottom line beat. For them, they have so many divisions like healthcare, aerospace, and automotive, all good. But they also do a lot of clean water technology that's been disrupted in the Middle East. DuPont's a nice name. Eaton is a big winner. They are kind of a can't miss due to the electrical Americas, as that division is just rocking and rolling due to accelerating sales and orders and backlog growth in AI data centers. Amazon said yesterday that it was opening up its supply chain network to other companies. They already have big name customers for the program, like Procter & Gamble, American Eagle, and 3M. It is a direct attack on UPS and FedEx. And it just shows you, I'm not going to say the sky's the limit, but Amazon aims big, as does Alphabet. Alphabet's going to tap the international bond markets again as AI spending is surging. They're going to sell at least $3.5 billion in bonds across 6 tranches for general corporate purposes, and the timing aligns with its plan to spend up to $190 billion this year on data centers and other AI infrastructure. Alphabet also said it's issuing Canadian dollar denominated bonds, colloquially known as Maple bonds. Alphabet raised about $20 billion in heavily oversubscribed U.S. bond sales. Now they're tapping the international markets. I think the memory stocks still have ways to go. SanDisk, Western Digital, Micron, they're showing business 2 to 3 years out, and Wall Street loves that. I might be retired in 3 years. That's some predictability. Tesla told European regulators it expects a EU-wide full self-driving approval in the second or third quarter, weeks after the Dutch regulators became the first in the EU to approve Tesla's full self-driving supervised systems. Internal emails viewed by Reuters showed the concerns the company still faces across the bloc. That includes regulator questions about speeding, performance on icy roads, and whether calling a system that requires constant driver attention full self-driving is misleading. CEO Elon Musk has blamed Tesla's weak European sales on the lack of full self-driving and is betting that wider approval could help turn things around. Cummins engine, getting off of tech for a second and getting into the good old boring things like Caterpillar, companies that have nice dividends and 100-year-old track records. Cummins Engine is a 107-year-old engine maker. They had solid first quarter results. Nothing crazy, but its power system segment, which makes generators, posted record-breaking performance fueled by data center demand. Management boosted its full-year sales growth outlook to 8 to 11%, up from 3 to 8%. Demand for data power generation across the range of our products continues to outpace expectations, said Cummins CEO. Ticker symbol on Cummins engine is CMI. CMI. And what I want you to think about with this is, to get the AI theme, you don't have to have the pure AI numbers of the Microsofts or the Amazons. You can build an AI portfolio with other names like Caterpillar, Eaton, Cummins Engine. Potentially, I don't have enough research done on Cummins, but it pays a 1.19% dividend yield. That's attractive. When you take a look at a 1-year chart of the company, it's gone from $324 to $660. That's a double. If you take a look at a 5-year chart, not quite as impressive, 208 to 661, still pretty good. Now, it's recently gone straight up, and that's where you get into trouble as an investor. If you were to consider a Cummins or a Caterpillar or an Eaton or any of the builders that are doing super well, consider buying 1/3 now, 1/3 in 3 months, and 1/3 in 3 months after that. You do not have to go all in. Scale in. Your first third will be either worth more or less. You'll be happy getting less or happy you've already got to a nice position. You don't have to go all in and then worry about where the market goes. But Cummins Engine and Caterpillar, they'll always have their industrial equipment business to fall back on. Some of the AI software companies won't. The companies like Google, Microsoft, Amazon, and Meta will always have their businesses to fall back on. Try to, in your head, not get too exposed to companies that are hit or miss. You can find me online at robblackshow.com. That's robblackshow.com. I have a big event coming up May 16th. It's a Pints and Portfolio in San Mateo, 11 to 1. It's limited to just 10 people. Sign up today at robblackshow.com. It's afternoon on a Saturday, early Saturday. I buy the beers. We talk financial planning. Let's take a break here. Be right back.
Markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Thanks for listening. Let's take a look at the second part of the show. S&P 500 is still up. About kind of where it was, maybe a little bit higher. Nasdaq's a little bit higher. Nasdaq's up 1% now to 25,322. Stocks are rising as oil is retreating. Earnings come in robust. Tonight we get AMD. Last night we got Palantir, which is giving back 7%. I think when it gets down 10 to 20%, it looks attractive. It's not my favorite name, but I'm just telling you what, if it was in my list, that's what I'd be looking for. Alphabet is closing in on NVIDIA's spot as the world's biggest company. They'll get that probably in the next 15 days. But there is a law of big numbers. I think Alphabet can scale wider than NVIDIA can at this point in time. SanDisk's up 142, up 11% this morning. Qualcomm's up 9%. Alphabet's up 1.1%. Disney, not so much. Down 60 cents to $100 a share. They're going to report earnings soon. Meta's given up $8 to $601. NVIDIA is really having problems with 200. Airbnb is going to report this week. Microsoft's still down today. Amazon is up $2, up 1%. The mega caps are definitely having some pretty solid runs, except for Tesla and Microsoft. Google and Amazon have been just amazing in the last 45 days. Home Depot was reinstated as a buy at Bank of America. Bank of America thinks comp growth will outperform and traffic trends will hold up well versus rivals. Will the Fed lower rates this year? That's what's going to move Home Depot, in my opinion. I like the disconnect that it has with the S&P 500. I don't like the catalysts that aren't there right now. Barclays raised the price target on Eli Lilly to $1,400 from $1,350, citing first quarter results of Lilly's strong tirzepatide momentum. I'm okay with Lilly. I'm okay with it being in the S&P 500, and that's where I get my exposure. When it falls 20 to 30% like it did last year, I think it's a trading opportunity, but I'd still rather not own it directly. I'd rather have it in like an S&P 500 fund. Hertz today is climbing on an announcement that it's expanding its car sales to eBay. I can't understand a reason to own Hertz or, for that matter, eBay. So earlier in the week, GameStop said they wanted to buy eBay. Today, eBay's down 3.5%. Analyst Jackson Adair he's with KeyBank. He's talking about Microsoft today. Let's take a look at what he has to say. He says, we continue to focus on the three key lines and debates for Microsoft: Azure capacity and growth, Copilot adoption through Microsoft 365 commercial cloud growth, and capital expenditures. There's so many other things going on at Microsoft. After looking through the 10Q and a few more of the line items from last week, we're highlighting a few that we, and maybe you, hadn't focused on but don't want to miss. Interesting. One of the lines was future lease commencement, headcount scenarios, depreciation margin, and more. Leases not yet commenced increased by over $40 billion in the quarter. Headcount's expected to decrease in 2027. Windows and OEM and devices revenue decreased 3% in constant currency. Operating margins and gross margins topped expectations. It's interesting analyst note talking about hidden drivers of what they can pull back on, if you will, financial engineer in the future quarters. And that allows for upside to be interpreted in stock. Mizuho is lowering their meta target from $850 to $835. It's currently a $610 stock. Analyst Lloyd Walmsley noted, we like meta shares, and we expect to see more AI product roll-ups and rollouts help fill in the blanks around what the company plans to do with its new and improved large language model and how it can eventually monetize. We like the vision of Meta developing agentic AI for mom with a consumer focus, just as the major AI labs increasingly focus on enterprise. We're encouraged to hear the company flag large increases in Meta AI use since the Muse Spark launch. We believe it's critical for Meta to, one, demonstrate more of a product roadmap and adoption progress, and two, figure out how to curtail cost CapEx growth ahead of the second quarter print and guide for third quarter, given significantly harder comps. If growth peaks in the second quarter, unless we get one of the above definitively, the multiple could compress. That's a great analyst call. And finally, I get what Meta wants to do. And it's a really dumb line that I just read. Meta wants to develop agentic AI for mom. When moms, and I'm not knocking moms who don't work, but stay-at-home work is just as important. But my wife posts a little bit too regularly on Facebook, and I can see her going, what's a good recipe? I want my kids to eat more vegetables. How can I hide it? Intel's up 14% on a report of an Apple chip talk. Stock hits an all-time high. The jump comes after Bloomberg reported that Apple was in talks with both Intel and Samsung to produce the main processors for its devices in the United States. The iPhone makers had a long time reliance on chips from Taiwan Semiconductor Manufacturing. But Taiwan Semiconductor Manufacturing is saying, hey, we go to the highest bidder, and right now AI is getting a lot of dominance that Apple used to give to us. The surge for Apple today, up 14%, follows its best month in 55 years. The stock jumped 114% in April. It pushed the market cap past $470 billion. They've announced a partnership with Google, as well as plans to join Elon Musk's Terafab project. That it's going to take a lot of money to be raised for that Terafab project to come to a reality. I'm starting to question the outer limits of some of these projects. Hey, let's put data centers in space. Hey, let's put a Terafab, that's the biggest semiconductor manufacturing facility, research, design, everything in Texas. You're talking about $4 trillion plus. The rise of artificial intelligence has spurred renewed demand for Intel's central processing units. CEO Lip Bhutan called CPUs an indispensable foundation of the AI era. The surge marks a sharp turnaround for the chipmaker, which was struggling to keep up with the AI race amidst major manufacturing delays. The company's stock is now up 330% since the U.S. took a 10% stake in the company last August at $8.9 billion. President Trump praised the stock's climb last week. Intel stock continues to rise. I'm very proud of that company and that I'm responsible for making the United States of America over $30 billion in the last 90 days on that stock alone. Here's interesting. NVIDIA and Pulte Group. They're helping a startup put mini data centers on homes. Why do I think AI has a long way to go? Because of stories like this. Span, a California-based startup, has developed small fractional data centers, or nodes, called XFRA units. The idea is to take advantage of unused electrical capacity. Speak English. Trying to take advantage of unused electrical capacity on local grids, which the Span smart panels can pinpoint. NVIDIA GPUs are powering the units, and Pulte Group is testing the systems in a handful of communities. I've always liked the idea of solar getting into smaller pockets of communities, and not just on my roof, but let's say we turn a dilapidated baseball field into a solar project. Now, again, there's issues there with kids and vandalism and such. But I like the idea of local communities picking up slack for the proliferation of massive energy and water sucking data centers. Some big players in housing are betting consumers would be willing to put mini data centers right on the walls of their homes. Span is a California-based startup that originally launched with smart electrical panels designed to help homeowners save money on their electric bills. Now, with the help of NVIDIA, it's come up with something new, small fractional data centers, or nodes. They're called XFRA units that can be put on the side of a home and small commercial business. Pretty interesting stuff. Span collaborated with NVIDIA using its technology in the system, including one of its first market uses of liquid-cooled NVIDIA RTX Pro 6000 Blackwell Server Edition GPUs. These require no fans, so there's no noise. Span systems include its smart electrical panel. In some cases, solar panels. The panels tap into existing unused electrical capacity, which then powers the extra system. Not sure we need this, but we're going to get it. Palantir had its best quarterly results on record the same day Iran broke its ceasefire in the Middle East. Total revenues grew 85% to $1.63 billion. U.S. revenue jumped 104% year over year. Full guidance was above expectations. When you take a look at the revenue growth since going public, it's beautiful. And when I say it's a chart that has numbers that are small on the left and numbers that are big on the right, and they continue to scale that direction. The backdrop to Palantir's earnings almost fittingly include rising oil prices and treasury yields, as well as new Iranian missiles fired at the UAE. Palantir's blowout quarter gives contractors and private sector companies an updated view of just how profitable an AI-forward defense company can be. Yesterday, Amazon showed that it's opening its sprawling logistics network, dealing painful blows to both UPS and FedEx. Amazon's an e-commerce titan with the force of the WWE wrestling behind it. And when they get into your industry, it sends shivers down your spine. It's called Amazon's Supply Chain Services. It's available to any business, which an Amazon release took care to emphasize, including healthcare companies, automotive, manufacturing, retail. It includes 200 fulfillment centers in the United States, 80,000 trailers, 24,000 intermodal containers, and a fleet of over 100 cargo planes. That network that powers Amazon's own hyperfast 2 to 5 day deliveries, the one that the company and its third-party marketplace sellers have used for years. They already have the prowess of it. Now they're just opening up space. Evercore ISI dubbed the announcement a direct competitive blow to UPS and FedEx, which have traditionally dominated the space, but have struggled to capture revenue from a surge in parcel shipping in recent years. Every year, my family gets a ham from Honey Baked Ham because my mom used to love Honey Baked Ham, so I pass it on to my kids. And it's always delivered by UPS, and it's interesting to watch the logistics of it. UPS has the cold storage. There's no reason that Amazon couldn't have the cold storage or deliver the honey baked ham in the future. So other competitors got hurt, not just FedEx and UPS. DHL was down 7.3%. GXO Logistics down 18%. Maersk was down fractions. Amazon's playbook's wide, and it's got a lot of room to grow up. Meta said they're investing in robots. To the biggest yawn that I've done in a while, the social media company acquired Assured Robot Intelligence, started developing AI models for robots. AI is moving from screens to the physical world. Meta isn't just chasing chatbots anymore. It wants to see, move, and interact in reality with you. Buying a robotics AI startup helps Meta train models that go beyond text and images into real-world intelligence. They're already into VR headsets, smart glasses, and wearables. Robotics is the next logical step. Training data with robots generate a different kind of data. Movement, spatial awareness, and physical interaction. It's all part of the future, potentially, for a company like Meta. Tesla's building humanoid robots. Alphabet's investing in robotics plus AI. Amazon uses robots across warehouses. Meta doesn't want to be left behind when the AI battleground switches. I saw an interesting statistic from last Friday, so it's a little bit out of date. In 2025, the S&P 500 was up 17.8%. In 2025, the Russell 2000 was up 12.8%. 2025, the Russell 2000 value was up 12.59%. Now, year to date, those numbers have flipped in the first 4 months of the year. So the S&P 500 is up only 5%, whereas the S&P 500 last year was up 17.8%. I guess you could say it's still on track for that. The Russell 2000 has already matched last year's gains of 12.8%. It's up 12.6% 2000. But the value side of it is starting to beat as investors are looking for stocks that are working that may not be as obvious. Bond yields have crept above a dangerous level that could signal weakness for stocks going ahead. This is the only big sign that I'm seeing flashing right now that you need to be aware of problems down the road. The yield on the 30-year U.S. Treasury was above 5% on Tuesday as rate hikes expectations grew. Investors are worried hot inflation will cause the Fed to pause rate cuts, which could hurt stocks. So that 30-year U.S. Treasury, that's a measure of long-term interest rate expectations, hovering around 5%. It marks the first time the 30-year has surpassed that key psychological threshold since summer of last year. Inflation has been the primary move or driver of that move. The fear hanging over the markets is that higher oil prices are going to stoke inflation. And also we have just a poop ton of debt in the United States. So servicing it's going to get more expensive. The odds of the Fed lowering interest rates at all in 26 now is around 8%. A month ago it was around 20%. Global strategist JP Morgan said they saw a risk that yields could rise after the latest Fed meeting in which central bank chief Jerome Powell spoke of the possibility of hotter inflation. That's a big story. I'm not going to become a bond watcher per se. I look, but I'm not going to turn this show into U.S. trade deficit sees second increase since tariffs were struck down. Winner. Job openings remain flat in March as layoffs ticked up. Loser. Friday's job report's kind of looming large, as is today's AMD's results after the market. AMD's moving up 3%, up $10 today, sitting at $352 a share. So strong earnings are sending the S&P 500 and Nasdaq back to record highs. Iran worries are fading for the day. Coinbase is cutting 14% of its workforce in an AI native pivot. Stock jumps on that news. Anheuser-Busch is pushing no alcohol beer. That can't be selling well. Cheers to beer. The strength of the category and the consistent execution of our consumer-centric strategy drove continued momentum across our footprint. So says the CEO. Most of their recent growth in the last couple of years comes from price increases. Alcohol consumption has weakened across global markets. Company's total sales volume shrank 2.3% from the year before. Beer is down 2.6%. Bud Light and Anheuser's flagship beer lost its long-time dominance in 2023 after marketing backlash weakened demand. Investors are worried that Michelob Ultra's growth might not be enough to offset declines in legacy brands. The push into low and no alcohol beverages, I'm fascinated by this. Budweiser Zero, Michelob Ultra Zero, Corona Zero. Strategy is gaining traction. Its no alcohol beer portfolio delivered 34% revenue growth. I can't believe it. I would not have predicted that. Speaking of beers, come out to a Pints and Portfolio May 16th, 11 to 1, San Mateo. Let's talk financial planning, retirement issues, what you're doing right, what you're doing wrong. I bring some really friendly CFPs, and we have a good day of it. Sign up at robblackshow.com. That's robblackshow.com. Stay tuned.
This interview featured on The Rob Black Show is brought to you by EP Wealth. Learn more at robblack.com.
Joining me today, CFP Chad Burton. Chad, with so many of the new rules that are out there on a yearly basis, especially this year, how do you decide how much to convert each year?
Yeah, and I assume you mean convert each year from your IRA to your Roth IRA. Because I think the thing that people have to understand is that you have a lot of control over your tax bracket in retirement until the date you start having to take money out of your IRAs. And that's age 73 or age 75 if you're born 1960 or later. And so the first thing you have to do before you bother saying, oh, what's my tax bracket? How much room do I have left at the existing tax bracket, and should I convert that to a Roth? First of all, how much money are you leaving your kids? Do you have enough money to last till age 100? If not, maybe you shouldn't be doing this at all. And so that's one thing to think about, is that, do you have enough to do this? Are your kids at the same tax bracket or lower tax bracket, or are they at a higher tax bracket? And because the reason why I say this, Rob, is because if you pass away with an IRA or a Roth IRA, after you die, your spouse can roll it into their own account. But if that person passes away and it's going to the kids have, for a regular IRA, they have to take a little bit out each year, but they have to pay all the taxes over 10 years. With a Roth IRA, they can enjoy tax-free growth for 10 years as well. So Roth IRA is really good to leave to kids, but what if your kids are a really low bracket? What if you're a high income earner and your child's a social worker or a teacher and they're not making as much as you are making even in retirement? It may not be serving the family very well. So you have to think about, how much assets do you have? Have you done a proper long-term cash flow projection to figure out what's left over? And what are your kids' tax brackets? And then clearly in our software, and I show a very clear example of this at the event, Rob, is that you can look in the future and take your cash flow analysis and do a tax overlay to see at different ages, what is your marginal rate and how much money do you have left at that bracket, to see what the opportunities are. You can clearly see that, oh, maybe between now and age 73, I should convert 30 grand a year to maximize the existing bracket and then reduce my forced taxable income when I turn 73 or 75, depending on your age. That you really have to have a reason to do it. And that cash flow and tax analysis can show that. Another thing that I like to think about is that if a person is considering this and they meet the criteria that I've been talking about, when you convert money from an IRA to a Roth, you got to pay the taxes on it. Okay. So do you have cash on the sidelines to pay that increased tax bill? Now, you don't have to do it out of cash. You can actually withhold some of the money out of your conversion, but it's not ideal, because if you're going to convert 20 grand and you withhold taxes out of it for state and federal, then maybe you only have 15,000 left in the Roth account growing. It's still growing tax-free, but it's less money growing tax-free than tax-deferred. Does that make sense?
Absolutely.
Yeah. So it works best when you have the cash on the sidelines to pay those taxes. But with the One Big Beautiful Bill Act, even though it's phenomenal for married couples filing jointly that are both are over age 65, The standard deduction is essentially $46,700 as long as their adjusted gross income is under 150 grand. So there's a lot of taxable income that they take. That means if all their income is from an IRA or Social Security, the first $46,700 would be essentially tax-free from their IRA and Social Security. So that's really good, but it made the idea of converting money from an IRA to a Roth, we have to think about if they're taking the standard deduction, maybe we want to keep their AGI under 75,000 if they're single, or 150 if they're married. If they are a high income earner, like they've got a lot of income and they're itemizing their deductions and they're taking advantage of the new SALT limitation where you can deduct up to 40 grand of your state and local income taxes, people start to lose that if their income's over $500,000. So some people that wanted to do a large IRA to Roth conversion, if they do too much, they could lose that new state and local income tax deduction. It could go from 40 back down to 10,000, which isn't that big of a deal, but it's something that you can still consider. So yeah, it's some really good things under the One Big Beautiful Bill Act for retirees, but it made it more complicated.
How do I protect wealth from higher future taxes or policy changes? That's a really good question, because a lot of people see Social Security running out, thinking there's going to be more taxes, whether it's on the Social Security, whether it's at older ages. But future taxes, a Democrat can come in and change everything Trump does. A Republican can come back and change it different. Like, it seems complicated.
Is it going to be $2 trillion in additional debt next year or $3.2 trillion in additional debt next year? That's the two choices. So the debt's going up, and that we could balance the budget if a lot of jobs come back to the U.S. and other things like that. But we are now even more so than what I said last year, because the 2017 Tax Act made it so that we're in the lowest tax bracket in the 31 years that I've been doing this. And now with some of the extra deductions, we're even lower. Yet the debt is accelerating. So you've got to be aware that taxes have to go up in the future, because the government doesn't really cut expenses. You got to have somebody come in and say, okay, we're going to freeze expenses for the next 5 years, and you guys all have to grow into your budget, and then we'll grow out of it. So you have to assume that taxes are going to go up in the future. That's why it's very important to have a financial plan where you can literally click on a button and see what your annual tax bill is projected to be like, what your marginal rate is going to be year over year between now, how it changes when you get Social Security, how it changes when you have required minimum distributions, because there's little things to accelerate it. What are the issues in your financial plan? If your issues are, I have too much stock in a certain company or a certain sector, then it's learning how to maximize the capital gains bracket. And maybe it's alternating your income sources before you have to take money out of your IRA. Maybe one year you pull a lot of capital gains off the table, which has a portion of that income at 0 and then a portion at 23.8%. Or maybe I've got too much money in my IRA and I know my kids are at the same or higher bracket than I'm going to be. So I need to know how much money I have left at my bracket each year and convert a little bit from an IRA to a Roth where the government can never touch it again. So you have to, number one, be able to monitor the legislative changes, because strategies can shift rather quickly. Know your children's tax bracket, know the overall family plan, and just have a really good cash flow and asset projection in the future to say, what are my risks here if capital gains taxes go back up, or if ordinary income taxes go way back up in a decade from now?
Know your children's tax brackets. I can't even figure out who they're calling on their phone, but that's different.
And let me give you an example too of something else. So I had a client that his son had graduated from college. Okay. A lot of college kids are having a tough time finding a job right now, Rob. It's a little rough out there. So he finally got a job, but it's the first 6 months of it is 1099 contractor's income, because that's pretty common these days. Somebody will get hired as a contracted worker, and then they'll bring them on permanently after they can show they do a good job. So they're getting $25,000 of 1099 self-employed income. And the parent really wants them to save some money, but they also need that money to live. They wanted to gift them some money. And you could, the way that the self-employment tax and everything works is that they'll be able to have that income. Plus the parent will be able to transfer. They have a bunch of Apple stock, enough Apple shares that have up to a $15,000 gain. And the way the tax system is going to work, this kid will be able to sell that Apple at their bracket, 0% capital gains rate. They'll use that money to put in up to $15,000 into a individual Roth 401k, and then they'll live off of the rest. And so there's some family planning that can be done as well when you're trying to protect family wealth and maximize these tax brackets between capital gains and ordinary income.
All interesting stuff. Any final thoughts before we wrap up the segment? We've got about 30 seconds.
Yeah, just know what your buckets look like. You got tax-free Roth buckets. You got buckets that have never been taxed, like IRAs. You've got interest income. You've got tax-free income. How do they all work together? And it's really good to, after you get your taxes filed, to sit down with the CPA, your advisor, and kind of understand how it works. It helps you be more informed and understand what people like me are recommending.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.